On Wednesday, Silicon Valley Bank was a well-capitalized institution seeking to raise some funds. Within 48 hours, a panic induced by the very venture capital community that SVB had served and nurtured ended the bank's 40-year run. Regulators shuttered SVB Friday and seized its deposits in the largest U.S. banking failure since the 2008 financial crisis and the second largest ever. The company's downward spiral began late Wednesday, when it surprised investors with news that it needed to raise $2.25 billion to shore up its balance sheet. What followed was the rapid collapse of a highly respected bank that had grown alongside its technology clients. Even now, as the dust begins to settle on the second bank wind down announced this week, members of the VC community are lamenting the role that other investors played in SVB's demise. The episode is the latest fallout from the Federal Reserve's actions to stem inflation with its most aggressive rate hiking campaign in 4 decades. The ramifications could be far-reaching, with concerns that startups may be unable to pay employees in coming days, venture investors may struggle to raise funds, and an already battered sector could face a deeper malaise. The roots of SVB's collapse stem from dislocations spurred by higher rates. As startup clients withdrew deposits to keep their companies afloat in a chilly environment for IPOs and private fundraising, SVB found itself short on capital. It had been forced to sell all of its available-for-sale bonds at a $1.8 billion loss, the bank said late Wednesday. The sudden need for fresh capital, coming on the heels of the collapse of crypto-focused Silvergate Bank, sparked another wave of deposit withdrawals Thursday as VCs instructed their portfolio companies to move funds, according to people with knowledge of the matter. The concern: a bank run at SVB could pose an existential threat to startups who couldn't tap their deposits. The stock's collapse continued unabated, reaching 60% by the end of regular trading. All told, customers withdrew a staggering $42 billion of deposits by the end of Thursday, according to a California regulatory filing. By the close of business that day, SVB had a negative cash balance of $958 million, according to the filing, and failed to scrounge enough collateral from other sources, the regulator said. We will keep you updated. Please consider to like, share and subscribing to the channel.